The topic of business building has gotten very, very high priority across industries nowadays. And what's different is companies are starved for growth and they're getting ever more creative across industries to find that new source of revenue, that new orthogonal business that adds to the product portfolio. And insurance is no different. Carriers around the world are looking for new growth opportunities, whether inorganic or organic. Our research has shown that business building businesses under the portfolio of a corporate has risen to be a top 3 priority for more than half the executives out there. And that number is only going up during COVID times. The problem is business building for large corporates is very difficult. The success rate is something in the teens, depending on how you measure it. The reason is the large company executives are very good at running large companies. And that's a very different skill set from building new businesses and doing the entrepreneurial thing. However, that small percentage of companies that figure it out, whether it's building a direct digital attacker, or it's building an analytics platform-based business, or it's building some other type of business, those winners see outsized share of revenues come from these new businesses. So the rewards are attractive for those who can figure it out. We did a deep dive on, well, why do something like 80 to 90% of these fail? What are the common failure modes and what's driving this? And we found 6 main reasons. The first is large companies, when they launch a new business, they need to be clear on what their incumbent advantage is. Why would they win versus all the other startups that may be out there trying to do the same thing? And not being clear on that, whether it's data or assets or technology or people or brand or what have you, is a reason for creating risk and ultimately failure in business building. 2 is slow starvation, we call it. Business building requires a lot of capital and a lot of talent. There is no cheap and low talent path to building a large, highly successful business. And management teams need to have the discipline of continuing to fund these things as certain markers are met over time. 3rd is expectation management and the misalignment. How you measure the progress of a new business being built is totally different from how you measure the progress of a mature business. In fact, you don't look for revenues and earnings in the early days of a new business. You look for other things. Do I have a team? Do I have an MVP of the product? Do I have a good product market fit? Do I have good feedback from customers? And those are better indicators than any revenues in the early days that this thing is going to work. The last 3 reasons I'll combine into one, which is culture. The culture of large companies tends not to be the entrepreneurial test and learn agile culture that is needed in these new business builds for them to take off. So what are the keys to making this all work? Well, a few things. The first is CEO, top team, and board commitment. Building a new business to drive outsized growth has to be a top priority that is discussed at the management team level and is visibly and consistently supported by the CEO. The second is obsession with value over any ideas or shiny objects. The goal here is not to build a great website, to build an app, to get a press release out. If that were the goal, everyone could do it. The goal is to create outsized value. How do you build a business that's going to meaningfully add revenues and value to the portfolio of the corporate over time? And that's the goal. 3 is this culture point we talked about, an agile test and learn culture, one that moves quickly, pivots quickly, learns from failures, rewards risks being taken when they're the right risks, and there are learnings from the failures from those risks. That's what's needed culturally. The 4th is open architecture capabilities. In today's world, no one company is going to fully build and contain and own a successful at-scale venture. The solution will always require partnerships, JVs, acquisitions, in addition to building and having some of that secret sauce internally. And how you build that mosaic of capabilities in combination with partners outside of the company is critical. 5th, balance between organizational freedom and corporate support. That's a lot of words to say, keep this new thing distant from the core to give it space to grow. At the same time, build bridges so you can leverage those assets we talked about. And then finally, performance management in a dynamic way. How do you evolve what you look for quarter to quarter, year to year, so that you're looking for the right things? We find in every industry, and in insurance in particular, where some of these legacy technology, legacy process, legacy mindsets are in place, it's quite important to put in place these new ways of working, new operating models, new mindsets for a new business to really take off and scale.